MBI.com. This is John. This report is for the 7th of November. Well, we've had a brief period of weakness here with that MBI magenta rolling down underneath. It started to flatten out a little bit here, uh, pre-market of Asia. And with that, we're seeing rising white now. It's not above magenta yet. We're also seeing orange dipping. So all those things potentially point to a basing of that 23% for the time being. We also have gold rising here on the shakeout now. Of course, shakeout has to improve. We're at -9 on that. So, from this standpoint, at least there may be a little bit of softening in the decline, and it may be enough to provide support at this particular stage. From an NQ standpoint, pretty much the same, except for you can see a bit of a difference here in the MBI readings with the white leading, and that will certainly generate a little bit more softness from the NQ, but you can already see it's already close to its 0% from that spike of the white MBI from before. And that weakness has been really dragging the S&P, or at least holding it back from what it's been doing. You see the difference is orange caught in that gap between cyan and the red DOC, and as long as that gap is there, um, with it trailing in between, usually you get a continuation within the current setup. Um, the fact that orange is falling gives a little bit more bounce to it, but nonetheless still weak in general. Oil, nice spike, and that's just more problems for the Fed. Again, this is the primary leader of inflation, and you're not going to get it under control if oil remains at these levels. Literally, the quickest way to get that normalization and or easing that the market really wants would be to have oil dip back into the 60s or lower at a minimum. The euro, massive spike. Nothing particularly special other than they think that, you know, the euro will be saved because winter hasn't been that bad so far, even though we're not quite into winter yet. It's only in fall, but it has been relatively warm, particularly this late. So that's saving at least the dire prediction so far. But that could change with an extremely cold spell or something to that effect. But still subpar, but that's way over where it should be. And right back to where I expected in that middle range here, 94, anywhere between 92 and 95 range, I think is probably where rates will settle for a little while before the realization sets in that, well, particularly if oil does what it does, that Fed's going to have to continue to go further. Because you're looking at negative rates when you have inflation exceeding what interest rates are. It's a negative yield. There's no other way to describe it. And gold responding off all of these items reasonably well. And the reality is that central banks have been buying gold quite a bit recently, and this is finally an indication that there's a little bit more pressure starting to be applied and starting to realize itself in the actual natural markets. From a Bitcoin standpoint, we talked about it before that we're looking at the potential for better improvement from the crypto side because again, as an inflationary hedge and getting away from the instability of fiat currencies. When you say the euro moving as much as it has, that's pretty dramatic for a well-established currency, and so these kinds of shifts lend itself towards something like Bitcoin because you're really not looking at all that much difference relative to what you're seeing from regular currencies. And so that may attract others. And same with ETH, but we expected them to, from these low points here, because of the support that they had been receiving, to build and start to make a new run. May take a little while, but nonetheless, still a great alternative, I think, now that they've matured. From a 50K standpoint, we had the nice dip. We based beautifully. Magenta started back up above, and anywhere along that route, as soon as the orange started dipping in for me, it's when it dips down below that 7.5 range. It's when I think to cover, and it doesn't necessarily mean I have to go buy, but it definitely is a cover point. And then certainly once the shakeout, yellow moves above magenta, and you start to have the histogram inside, and certainly magenta leading, particularly over the 23%, then it becomes a clean buy setup, in my view, from that standpoint. Um, Currently looking at the 5K, not too shabby from the moves that we got. And again, this is that added volatility. Let's go back to the beginning of it because um, it's been pretty clean from a broad standpoint with these moves. And I think taking advantage of them from a clean perspective and expecting to get some of these broader moves as opposed to just uh, popping in and out. Um, I think that it's been pretty easy to follow some of these dips with clarity and really haven't been all that confusing. I love this whole setup right here was fantastic because you had the clean red lead on all of this, and then every one of those moves of magenta below 25, new opportunity to short, pivot lower there. This one never even got close to exceeding the red at that point when it pivoted lower. You weren't even close to getting to a 23 where you might be thinking, okay, I'll cover for now, but no, pivot lower. Then it started to build up, and magenta took over, and we ended up with improving DOC red, which led to the P2 pivot, which is that higher successive pivots of the red with the nice orange dip below and the spike of green, and that continued a pretty decent run right back up to that 37.40 range. And then it was just a series of resting periods that were somewhat soft. We had some leads, the MBI white that led to the zero, but then caught some strength. So here you had the red leading, but then magenta took over. Well, when the magenta takes over, you got to respect it. And sure enough, you had the orange dip below the red, also green leading, and then green took over above cyan. Cyan ends up below red, which is always a buy. And that led to a beautiful run that finished all the way through. So, all good action. I think at that volatility that we were expecting, at least from, even if the intraday doesn't end that dramatically, these are big moves. You know, you look at it daily, it's all maybe the market moved 20, 30 points. That's sometimes not that big a deal at what the level we're at. But intraday, you're getting significant. I mean, this is a 50-point rally that took place here at the end of the day. So it's quite significant. And even the ranges between uh, some of these algo levels, still more than enough to be quite successful. Heads up, I'm heading out on a trip Monday through Friday, and going to try and do reports remotely. We'll see if I'm successful at that. If not, you'll know that I'll still keep checking in and do reports as I can, and I will get as much information as I possibly can to you. As always, though, trade well. We'll talk again later.